How's it, guys? Welcome back to FX Rhapsody. Today we're going to be looking at two currency pairs, doing top-down analysis, meaning it's starting from the daily to the hourly. Before we hit the charts, just go visit my website. It's got in the bottom left corner over here. There's some nice information, especially when you're starting out on trading. For those of you that's new to trading, there's some nice video categories that you can go to. And then also for those of you that has been in trading for a little while, there's some nice strategies and also some indicators and all that kind of things that you guys like to trade with. Also my preferred broker, go visit them. It's in the brokers tab. These guys are brilliant with their spreads and their margins and support and everything that you need to know from a broker. Very reliable. And then also on the resource tab, guys, there is COT reports. We're going to be using that for our analysis today. So you can download that for free. So let us hit the charts. Today we're going to be looking at Japanese yen pairs. We're going to start off with the British pound Japanese yen and then moving on to the US dollar Japanese yen. So top down analysis starting from the daily, moving down to the 1 hourly. What we can see on the daily time frame for British pound Japanese yen is that there's no big movements yet. The market is still, in between these two big, this high over there and this low over here, meaning that there is those highs and lows are still intact. Liquidity has not been tapped out. Price has not gone beyond or below that two areas. So it's just hovering in between these areas currently, just like indecisiveness. Going down to the 4 hourly time frame, let's have a look at what's happening there. So on a 4 hourly time frame, just zooming in a bit, then we can see a little bit better. Okay, so last week, I'm just relating back to a bit of last week, we had this high that I was talking about. And we looked at price going down, going up again. And so we still have this low intact over here as well, as we can see over there. So price went up and it kind of last week reached this area over here. Right about there, okay? Right about there. So we can see that price just tapped into that little bit of liquidity. That's the shorter end of it. And then still moving down, and then it moved up to this previous high that it created over there. So not tapping into that, again, like on the daily time frame, just hovering in between these two highs and lows. So we would like to see price breaking away or breaking past these, either tapping liquidity and then moving down, or tapping or going past that area, break that area, retesting it, and then moving up again. We will have to see what's going to happen this week. On the hourly time frame, we're going to be looking at some nice trades, possible trades that could have been taken. So on the hourly time frame, again, just going to zoom out a little bit. Okay. So where we were looking at the 4 hour on that high, this is going to be your high over here. There we go, just drawing that in. And then also that low that we were looking at on the 4 hourly time frame. Okay, just dotting those now down, because these are still the highs and lows that we will be looking at for break. That's on a higher time frame. Okay, we looked at price last week going down, coming up again, retesting that area, and we kind of ended the week over here last week with last week's analysis. So we had this area over here, and as we can see that price was hovering here, and as we can see price just went into that area, just tapping that area, going up and then moving down. Now why did it move down? I was also talking about this. Look here, how price gets drawn to these areas, guys. Okay, price gets drawn towards these imbalances in the candles, these fair value gaps, and then we saw price getting drawn to that area. Okay, we saw this low as well. We were talking about this low. I'm just highlighting it out for you, and as we can see, price went up into that area. Sorry. As we can see, price went up into that area. It got drawn to that fair value gap. Then it went down again, hitting that equal low, as we can see here. It made an equal low here, and then it moved up again. And how would you have traded this? It's easy enough. You take out your Fibonacci tool from this low to that high, that it's, it just going to take out all these unnecessary lines, okay, that it doesn't confuse us. So basically you could see that price moving up, making a turn because it got drawn towards that fair value gap area. Then price moved down again. You could have caught this nice little buy that was early. We talked about that last weekend again, went up, but then it went down again into that area of the 62%. And then after that second equal low, it was a good opportunity to buy, because we could see that price didn't break that low over there, and it started moving up again, and then it moved up. Okay, so that's a nice area for a nice buy. And if you had to buy on this area, I mean, you could have been 300 pips up in profit for this week only on one pair. Okay, so that is basically easy ways to get your trades, looking at those fair value gaps, using your Fibonacci tool. I mean, it's as simple as that, just to make trading simpler and easier. Don't overcomplicate it. So currently we see that price is just, going into a, it doesn't know what it's going to do, right? It's just slowing down a little bit. And so we're going to be looking at, obviously, just for an hourly time frame, those highs and lows, and we're going to be looking at where price is going to be breaking down. I always like to make this little, excuse me, block area, as you can say that. I'll make the nearest high, nearest low, and then just looking at what price is going to be doing in those two areas. Is it going to break it? Is it just going to tap liquidity, go down? Is it going to take liquidity out here and then go up? We will have to look at what price is doing. COT reports, let's have a look there on the British pound. The reason for that, slowing down and all that is, as you can see, is the British pound, it gets weaker, then it gets stronger again, then it gets weaker again. So the longs gets placed in the market, shorts gets placed in the market, then longs gets closed, then shorts gets closed. So it's very indecisive in the British pound side of things what the market is going to be doing. Japanese yen side of things as well, it gets stronger, as we can see over here, and then it starts getting weaker again. So this week we saw a lot of longs being closed in the market and a lot of shorts, meaning that the British pound, the Japanese yen is looking to turn again, and that would just make the British pound spike up again. So we're going to have to wait and see what's going to happen this week. I'm not going to predict anything. I'm not going to predict that, saying that price is just going to start moving up or the price is going to carry on downwards. I like to react to what the market gives me, right? And that way you will always catch your pips. Like I said, you can always, if it's a buying market, if it's in an uptrend, you can still sell down and catch your pips down there. Vice versa, selling market, if it's in a downtrend, you can still buy up and catch lots of pips. And as you can see on a higher time frame, that market is still doing, indecisiveness. They're not making any big moves, but we could still catch that 300 pip move to the upside. Okay, so that is it for this pair. Let's move on to the US dollar Japanese yen pair. We're starting off again on the daily time frame, and not a lot happening on this pair. I mean, on a daily time frame, it's just a continuation to the upside. As you can see, this price is just shooting up. The dollar is just strengthening. Japanese yen, as we just saw on the COT report, Japanese yen, weakening a little bit. So that is just a result of this big move to the upside. Let's look at a 4-hourly time frame. Okay, 4-hour time frame. We could see some nice little areas, if you would have placed a nice little trade, but we can drill down a little bit more on the hourly on that. But again, fair value gap being created, price breaking this high over here. Not the big high, but I mean, it's just the closest high, breaking structure basically, and just coming down, tapping into that fair value gap, and then shooting up again, right? So that would have been a very nice little trade if you had caught that. It's another 250 plus pips upwards. So guys, just I've made a couple of videos regarding this smart money, strategies and fair value gaps and imbalance in the market. So go watch those videos. I'm going to put it in the description as well, the links. So just go watch it. It's a very powerful way to trade, and combining that with your Fibonacci, then you're set to go. Currently, we see price, created another little gap over there. So I would like to see price moving or getting drawn towards that area, as we always know it does. Price action gets drawn towards that area. So we'll have to see what price is going to be doing there. On an hourly time frame, just going to highlight basically what we were looking at just now, but we saw this area over here, and I want to show you something. So before we talk about that, I'm just going to show you how obviously we were looking at the 4 hourly time frame. We were looking at this area that you could have caught. Okay, that was your break in structure right there, and then it created that fair value gap. Okay, there were 2 opportunities to catch this, and obviously the later one was the best. So price going up, coming down. If you caught this little upwards trend, you might have been tapped out. But again, excuse me, if you place your trades, just place your stop losses just beyond or below that fair value gap. Just place it below, because as you can see, price going up, nice little profits. And then if you would have bought here and then price coming down again, you would have been into a drawdown. And then, but price not hitting that stop loss of yours if it was just below that area. But this was a nice little entry. This is the one we saw in the 4 hour going up, clean entry going up. And then if you had to miss that, it broke another structure over here, and then drilling down to your lower time frames, you would have caught that little candles, area, because as you can see, that made a fair value gap. Okay, so you would have caught that downwards candle, boof, and that would have been another second entry that you could have caught if you did miss the first one of 100, and then you could have caught another 140 odd pips. So currently what we're seeing is, again, the Japanese yen just, coming down slightly, maybe doing a retrace, like I said, or like I showed you just now, towards the fair value gap. But there's lots of gaps in here. Okay, there's lots of gaps that price needs to come and fill. There's one. So let's have a look at what price is going to be doing. Okay, just for what I do, I'm just going to highlight that low, because as we could see, it is taking out the lows. I'm just going to highlight that high because, we know that the Japanese yen, or the US dollar Japanese yen, is in an uptrend. So, breaking beyond that area over here, we will see a continuation to the upside. But somewhere or another, price needs to start turning around and going down. But we will have to see what happens this week. So guys, that's all from my side. I hope you enjoyed this analysis. If you did, don't forget to hit that like button, hit that subscribe button, notification bell. There's definitely some more analysis coming your way this weekend. And comment in the comment section, guys. Let me know what you think. And if there's any other pairs that you want me to analyze for you. So guys, I hope you've been having a wonderful weekend. Stay safe and happy trading, guys.